You know, you pay for it every single year, but do you really know what's inside your home insurance policy? For most of us, it's kind of a black box. So today we're going to open it up, solve that mystery, and figure out if you're just insured or if you're truly protected.
All right, here's our game plan. First, we'll dive into the hidden risk of being underinsured. Then, we'll decode that confusing policy language. After that, we'll calculate what you actually need, find and cover the common gaps, and wrap it all up by showing you how to shop for the right policy like an absolute pro.
So first up, let's talk about a pretty scary truth. For a lot of homeowners, your policy might just be a financial time bomb, completely out of touch with today's reality.
So let me ask you this. That policy you bought a few years back, if disaster struck tomorrow, is it really enough to rebuild your life from scratch? The answer? Well, it might just shock you.
Because get this, just between 2019 and 2022, the cost to rebuild a home, we're talking materials, labor, the whole shebang, it spiked a staggering 55%. If your coverage hasn't kept up, you could be looking at a massive, and I mean devastating shortfall.
Okay, now that you see the risk, let's start talking solutions. And the first step is to actually understand the language in your policy. You got to speak the language to fix the problem.
First and foremost is something called dwelling coverage, or Coverage A. This is the absolute heart of your policy. It's the total amount of money the insurance company will give you to rebuild your house from the ground up. Getting this number right is everything.
Now for one of the most important and often misunderstood parts of a policy, ACV versus RCV. Think of it this way. Actual cash value, or ACV, gives you the used price for your stuff, what it's worth today after wear and tear. But replacement cost value, RCV, gives you the money to go out and buy a brand new one. This one little difference can mean thousands of dollars.
Let's put some real numbers to it. Imagine a fire ruins all your living room furniture. With an RCV policy, after your deductible, you get $6,000 to buy a whole new set. But with ACV, you only get $3,900. That's a $2,100 hole you have to fill out of your own pocket. So you see, RCV is what you really need to be made whole again.
Okay, so that brings us to the big question. How do you figure out how much coverage you actually need? Well, it's not as complicated as it sounds. Let's walk through a simple three-part blueprint. First things first, we have got to clear up a huge misconception. Your home's market value, what you could sell it for, is not, I repeat, not the same as its replacement cost. Market value includes the land. Replacement cost is just the cost of labor and materials to rebuild the structure. They're two totally different numbers.
So what actually determines that rebuilding cost? Well, it's a whole mix of things, right? The size and age of your home, any custom stuff you have like granite countertops or hardwood floors, detached structures like a garage, and then there are the big ones, local labor and material costs, and even current building codes, which can add a ton of expense to a rebuild.
Okay, next up is all your stuff inside the house. I know, creating a home inventory sounds like a massive chore, right? But it's actually super simple. Just walk through each room with your smartphone and take a video. For the big-ticket items like TVs or appliances, snap a quick photo of the serial number. Then just upload it all to a cloud service. That's it. That's your proof if you ever have to make a claim.
And finally, let's talk about liability. This protects your financial future if someone gets hurt on your property. And you really need to think about getting higher limits if you have things that increase that risk, like a pool, a trampoline, or even if you just host parties a lot.
All right, so now that you've got a handle on your needs, we got to talk about the fine print, the sneaky little things your standard policy almost certainly does not cover.
And yeah, you might be surprised by some of these. A standard policy, it's not going to cover you for floods, or earthquakes, or sewer backups, or even things like a termite infestation. And a big one for a lot of people these days, if you run a business from home, any damage related to that business is probably excluded too.
But don't worry. For most of these gaps, there's a fix. You can buy completely separate policies for major risks like floods and earthquakes. And for the smaller stuff, you can add what are called endorsements, which are basically just affordable add-ons for things like sewer backup or to give extra coverage to valuables like jewelry or art.
It really all comes down to this. The most expensive mistake you can possibly make is just assuming you're covered for something when you're not. Knowing your policy's exclusions is truly half the battle.
All right, so you're armed with all this knowledge. You know the risks, you know the language, you know what you need. Now it's time to put it all into action and go shopping.
Here's your simple game plan. First, get all your info together. Then, get at least 3 to 5 quotes so you can compare. Make absolutely sure you're comparing apples to apples on things like coverage limits and deductibles.
And finally, and this is so important, look beyond just the price tag. Check out the company's financial stability and customer service reputation.
So, let's see how these numbers actually play out. At first glance, Company B looks like the winner, right? It's the cheapest. But look closer. It has dangerously low liability coverage. Company C costs a bit more, sure, but it gives you way more protection for both your house and your liability. The cheapest quote is rarely the best deal.
And here's a little pro tip that can save you a massive headache down the road. Double, no, triple check that your mortgage lender's name, address, and loan number are listed perfectly on your policy. A simple typo here can cause all sorts of problems, from your policy getting canceled to major issues with your escrow account.
Okay, let's wrap this all up. Here are the key things to remember. 1. Rising costs mean you're probably underinsured. 2. Always go for replacement cost value, or RCV. 3. A home inventory is non-negotiable. It's your best friend in a claim. 4. Know your exclusions and use endorsements to plug the gaps. And finally, shop smart. Compare coverage and quality, not just the price.
I'm going to leave you with this final thought, because it really says it all. The goal isn't to find the cheapest policy. The goal is to find the policy and the company that will actually be there for you when you need them the most.
So now that you have the tools and you have the knowledge, I want you to go take a fresh look at your own policy and ask yourself this question. Are you just paying a bill for a piece of paper, or have you really taken the steps to truly protect your home, your family, and your financial future?